Welcome to the Money Huddle, a podcast that discusses financial topics for families, retirees, and small business owners. Hosted by Michael Baker and Ross Marinell. All opinions expressed by Michael and Ross or any podcast guests are solely their own opinions and may not reflect the opinions of Advisory Alpha. The podcast recording is for informational purposes only and should not be relied upon for investment decisions. Clients of Advisory Alpha may maintain positions in securities discussed on the program.
All right, we are live back with the Money Huddle. My name is Michael Baker, and I'm here with Ross Marinell. Ross, how you doing today, bud?
I'm doing awesome, man. How are you?
Making it, brother. We have an important day in the house today. The Baker household. My little guy is 6 years old today.
Ooh,
can you believe that?
Fun. Six is fun. Well, happy birthday, Harrison.
Oh, he is.
Is he fired up?
He is fired up. He woke up. I think he floated out of his bed today, all the way down, to the kitchen. We've already had some special birthday waffles for him. He's ready to do it right this weekend.
So he's just floating as high as Elon Musk right now.
He is. He doesn't know it yet, but he got a birthday present like the rest of us. Elon Musk has decided to make an offer, and after some back and forth, Twitter has accepted. So it looks like Elon Musk is buying Twitter. What are your thoughts on that, bud?
Well, it shakes things up, doesn't it? You know, it's interesting where if you're the richest person in the world and you have the capacity to buy just about anything, I think he's focused in on the ability to maybe open up the communication channels on Twitter a little bit, put a little less censorship on folks, take it and kind of detune this or roll back some of this idea of disinformation, misinformation, and just let people communicate more freely. And that is been a very, very hot topic in the news over the last few days.
Yeah, it's already started with Elon. He had a tweet that I actually bookmarked, and he said, "This is his, at least what he's saying, right? This is what he's saying is that attacks are coming thick and fast, primarily from the left, which is no surprise. However, I should be clear that the right will probably be a little unhappy too." Says my goal is to maximize area under the curve of total human happiness, which means roughly 80% of the people in the middle. And I feel like, yes, like because that's where most people are. We're in the middle.
Right. I do feel like the 80% of the middle has been forgotten in most, let's say, social media platforms, cable news channels. Yes, the 80% of the middle that just wants to come and engage, learn a little bit, connect with interesting people. Twitter. Well, one is this: Elon is a master tweeter. I mean, he's got his graduate degree in tweeting. He uses the product as well as any CEO human being in the world. He has an enormous following, and if you look at who would understand how to fix some of the challenges of Twitter better than the person who is most successful at using it. And when you look at some of the current board members, and without picking on people, they just don't use it.
Right.
I mean, and I'm not saying they don't have valuable expertise to bring to the organization and to the direction of Twitter, but if you don't really use it, it is sort of Twitter is a unique beast. And there are unique challenges to Twitter that don't exist in some other social media platforms. And so I think if you're not using it and intimately familiar with it and know how to make it work for you, then I'm kind of curious to see what he does. It certainly will be an experiment, a social experiment that I'm here for. I'm here for this. I want to see how it goes. Enough with the status quo on some of these. Let's just see what happens.
Well, I actually put down in my notes, I said, and maybe everybody has the lens that they look through for this, but I mean, I had a Twitter account like from, probably a decade ago, maybe more. I mean, it's been a minute, but I started using it during COVID. Like I was like, let's test drive this thing out. I mean, it seemed like we were all being forced into our homes. And so for me, Twitter has kind of become like, it's a place that I can get news. I mean, the ability to disseminate information like quickly from sources is, I don't know if there's a platform out there that's even close to Twitter. I mean, you can literally have 15 news sources, sharing, write-ups about different things instantaneously as it almost as things unfold. But it's become for me like kind of a water cooler and like a networking tool. And I think there's tremendous value in that. But what I wrote down in my notes was, I say, could this be a somewhat of a litmus test for the power of like a more open or more free market impact on a business? Because I don't care like what you think or what anyone would say, Twitter has become a political tool, and people have been kicked off of there for their views that maybe the people that run the company or that are monitoring accounts don't agree with. I've already seen tweets from people that I had not seen in ages. Like, it's been so long. I'm like, I don't remember last time I saw a tweet from this person, where maybe they're starting to loosen things up a little bit. But to me, it's like, he has referred to it as the town, like the town square, like the public square.
Right.
But to me, it's like, wouldn't you, as a business, wouldn't you want to have that, to maximize that 80%, usage of the platform? And then you could tailor the marketing to the different people based on different things. Whereas it seems like it's been so skewed for one political, sociological, well, that's a terrible word, social, political, these types of ideologies. It's been skewed in one direction largely, that, I mean, a lot of people have kind of fallen away. I mean, you remember there was the one platform that they tried to use that failed. Amazon took the servers off of it. I can't remember what it was even called. Parler. That's right. So they tried Parler, and Amazon said, no, we're not going to host on the servers. And, now Trump has Truth Social. He's involved in that. But Twitter, I mean, I think they have the first mover advantage if he can figure it out. And if, so Godspeed to him,
Yeah, it's really become the most relevant breaking news social media platform. So in the financial world, I mean, there's important information that's shared every day.
Oh, 100%.
Where you can see it very quickly. And if you follow intelligent, smart people that have good feed, then they can kind of, in some ways, curate some of the noise and hit some of the high topics. And then we can go and dig into those as we see fit and do our own research. So for me, Twitter it's an important social media just to stay stay on top of relevant events. And so, yes, I would like to see what happens.
As long as they don't have like, stupid dancing videos or people lip syncing to stuff on there, come on, man. That's just,
that's TikTok. That's the most
like this. I like the simplicity of it, man. I like, it's like, boom, here's like, shot, chaser, thought, article, my thoughts, that kind of stuff. And, and I like the diversity of opinion. I really do. Like, there's some tweets that I read that make my eyes bleed, but you know what? That is what freedom of speech is. And that's what like the town square is going to look like, right? We're all in this boat together. Absolutely.
So before we kicked off our recording this morning, got a little bit of a surprise. U.S. GDP fell at a 1.4% annual pace to start the year as pandemic recovery takes a hit. So it was a little bit of a surprise. We were expecting a gain of 1%. So we knew going into this year that the comparables for GDP would be very tough, because as we came out of the COVID lockdowns from 2020, 2021 GDP growth was pretty robust. So we were competing against some challenging comparables, so to speak. And so we were all sort of expecting a pretty low growth in that 1% range.
Right.
So it's a little bit of a surprise. I think some of that is coming from, this article, sort of highlights a couple of areas: fixed investment, defense spending, record trade imbalance. So I sort of decipher that to be, we are not building inventories as quickly as we were. So businesses are clearing out some of the existing inventory. We're not restocking the shelves as fast. That could be supply chain related. It could be concerns over, demand. We'll see. And then some reduced government spending. That also makes sense as we're coming off of the 2021 start. The government spent another round of stimulus. So it's not surprising that we sort of pull back some of the government spending this year. So all in all, I think we'll have to wait and see how the next quarter report comes out. What some of the more detailed news is. We haven't had a chance to really digest this report yet, but it is something to be aware of. So we've had our first negative GDP number since the COVID pandemic.
Listen, I mean, ever since we started to see these persistent inflation numbers, everyone in financial media, journalists, everyone's been throwing out the recession word left and right. And my thinking is that recessions are normal. They're part of the economic cycle. And so if you look at like what happened, we pulled forward a ton of demand to try to prop up the economy in 2020 and even into parts of 2021. I mean, we had every which way you could think of, stimulus money, PPP loans that were forgivable. So essentially that was like big time stimulus. Economic injury disaster loans. SBA was incentivized to loan out. Banks were given, I mean, every incentive with low rates to like get money out into the system so that they could make money lending it. And people did that. People that have money, they went and spent it. And we've seen different ways. I mean, look at what happened just here locally with us with home prices. Home prices are insane right now, just in the area of the country that we live in. And I know that we're not, in a vacuum. There are other areas as well. So if we see a little bit of a pullback, that doesn't mean to me that the sky is falling. It just means that, the U.S. economy is, we're not a cruiser. We are an aircraft carrier. I mean, this boat turns really slowly one way or another. And so, I mean, I would love to think we would be built for 6%, 7% annualized year-over-year growth. That's not normal for our economy, like our economy. At least the trend hasn't been that. So, if we see a little pullback, I'm gonna wait and see what's really happening. There's still so many variables going on. This situation with Russia, Ukraine, the current inflation environment, the Fed's trying to raise interest rates, the market's helping them by raising rates, on its own. So I think if consumer spending can stay strong despite the increase in prices, which so far it seems consumers are being resilient. Sentiments holding fair, and I think if we can do that, then we can limp through this. Doesn't mean we won't scrape our knee a little bit, but I think that I still want to look for the bright side and look for the positive thing and not go doom and gloom.
I tend to agree. We still have very, very low unemployment in the like 3.6% range. So
Yeah.
if you want a job, there's probably a job available in your community. We're starting to see, the initial increase in the 10-year treasury that happened over the last couple of months is started to kind of flatten out and almost even come down a little bit. So we're seeing rates that have increased fairly substantially in the first quarter start to levelize, which is good. We're under a 3% 10-year treasury rate today. I think that's a pretty comfortable place for those rates to be. I think it's a little bit of a healthy yield. It's not so low that it's spurring insane risk taking, but it's also not so high that it's going to keep people from being able to borrow. The second thing that we've seen is we've seen gold start to level off too. Gold is now under $1,900 an ounce again. It just hasn't been able to break out of that, that sort of price range for whatever reason. We're not gold bugs here, but we do use it as a little bit of an inflation hedge, but it's not soaring. We've seen some of the speculation in cryptos just sort of flatten as I'm looking. Bitcoin's trading at around, just a little over 39,000 per token. So some of the speculative buying in the cryptocurrencies has kind of been suppressed. And so we're not seeing the rampant speculation, but we're also not seeing
the house
some of those
took away the money
away.
pot. The house took away the money, like the stimulus check stopped. And
right,
and I mean, and that's to be expected.
So all in all, I think it was a little bit of a surprise, but I kind of agree with you. I don't think this is too dire of news.
Yeah, I mean, well, we're right now we're recording this. We're in the middle of earnings season. A lot of companies are reporting, you know, fair to good earnings. You know, guidance is still fair to good. You know, I mean, we saw, you know, even Google, you know, they were deemed a miss, but it was not what everyone was hoping we would see, but it wasn't awful. And you know, I listened to part of their shareholder call. CEO, you know, he was laying out some stuff. They've got some really cool things in development. Their Pixel phone that they just released has done way more business than any other Pixel that they had ever done. So you know, I mean, I think it becomes a little bit silly for us to just expect to expect companies are going to crush earnings quarter over quarter, quarter over quarter, and never like have a you know have a muted revenue quarter or other things, especially in the scenarios that we are all trying to work through still. I mean, first quarter, remember, it was, you know, Omicron, what's going to happen. I mean, the pandemic is all distorted our view of time. You know, I feel like we've lived through, you know, 7 or 8 years in the last 2 years with just everything that we've
Right.
gone through.
I
And
was,
so, you know, it's hard to kind of like go back and be like, oh yeah, back in January, we were still like trying to figure out like if Omicron was going to overwhelm our system and we were going to have to like pull things back again. Plus, you know, obviously we've now got a war that's broke out in Europe. So lots of things happening, you know, and so that I my default response is always when someone puts me on the spot, I'm like, go back to your plan. Like, what does your plan say? You know?
yeah, sure. I was joking I was on the phone earlier and we're talking markets a little bit. And I was like, yeah, we sort of just deleted COVID from the market.
Yeah.
And, you know, if you think about
Delete.
delete, it's just sort of a
You
rollback.
see
I
how
mean,
easy
really,
that is? Just pretend it's gone.
I mean, honestly, it's sort of a rollback to 2019, the end of 2019, where we were. You know, we had rates in this kind
Yeah.
of 2.75% range. We had good unemployment, you know, like so low unemployment numbers. The economy was
Yeah.
kind of rolling along, and then we had this transition into all of this
Well,
sort of communication sector.
you notice Dr. Fauci has essentially vanished from the public eye. I mean,
We deleted
he's
him.
still
He's
around, but
he's been deleted from the public square. But yeah, I mean,
yeah.
so that was kind of my point. You know, if you look at where money flowed for that year, you know,
Yeah.
into things like when you're locked in your home, where you're having to work primarily from home. So Zoom,
Absolutely.
Netflix, you know, sites like some of the social media sites had some explosion, you know, and now we're looking at, I mean, look where Zoom is today, and Netflix and Spotify and Disney and YouTube was the sore spot in Google's and you know earnings report this quarter that some of the advertising revenue is slowing down there, and so it
Well, I
starts to make
think,
sense. We're
yeah.
not locked in our homes any longer, and so we're back out in to you know
Yeah.
into the world, and so we're doing things versus being you know having to be entertained in our home. We can go out and and find more normal entertainment.
I saw someone the other day, just on that point, really quick. I saw someone the other day, they made a comment online about just the fact that they were going back to the gym. It like they had done the home workout thing and they were just burnt out. Like they just there's something for, and people who work out and exercise a lot, like they would understand. Like there's something to just being in the
You
environment
say that like I
at the
wouldn't
gym.
know.
Yeah.
Like for those people that work
Come
out,
on, man. I've seen your 2 pack of abs. I've seen your 2 hour abs,
oh
you know?
man. All right, so I don't know. So
No.
that's fine. You can you can make that assumption. You're right. I don't know how crowded the gym is. I haven't
But I mean,
stepped in.
my point was is that the people who work out a lot, like you know, there's something to just being in the gym environment around other people. You know, it's weird because it's not like you want to go and like be bothered by other people. It's just like, hey, like this is like the
Right.
group effect, right? Like we're here.
I want
This
to
is,
be
you
there. Just
know,
don't talk to me.
yeah, exactly.
Okay.
Which is bizarre, but it's true. All right,
Yeah,
what
so
else
I
you
think
got?
we
You had
just
something
deleted COVID from the
on the college board,
marketplace.
right?
What's that? Yeah,
I said you had
so
something on the college board, right?
I do. So we're starting to see hot and heavy in the headlines again about student loan forgiveness
Oh
and
yeah.
yeah, the some of the hyperventilation over student loan payments and how much money has been borrowed. And I just think for parents of, college bound students, it's really, really important to do as much research as you can in advance. And I know it is being done. And I know parents take it very, very seriously and trying to find the right spot for their student, trying to look at all options that make sense. So whether that's public schools, private schools, 2-year degree programs, I know people are getting a lot more intense in and focused on finding the right home for their student to get educated. And so part of the conversation around the student loan issue is that it's this sort of overburdening, expanding, exploding kind of debt. And the College Board releases a report each year. And this is trends in college pricing and student aid for 2021. For anyone who is not familiar with the College Board, I think they do a really good job of summarizing the key financial and sort of just sort of a summary of how the school is performing, how students are thriving in the school. So they'll give you some details about how long is the average graduation time. So we know it's always over 4 years, right? So is it 4.5? Is it 5? What is the average graduation time? They'll look at the percentage of students that graduate. They do some detailed work on potential earnings for whatever field you may want to explore. And so a diligent parent and student can sort of get in there and start to evaluate, okay, if I go to this school, it's going to take me 4.5 years on average to graduate. Here's my likelihood of success in earnings afterwards. And here's how much I'll need to borrow. And what the College Board is starting to find is that here's some of their summaries on student borrowing. So this is a bullet from their report. It says, after rapid growth in annual borrowing between the 2005-06 school year and 2010-11, total federal loans to undergraduate students declined by 46%. So in 2020-21, after the 10th consecutive decline in annual education borrowing, students and parents borrowed $95 billion, down from $135 billion from the 2010-11 year. Then it goes on to say, this is an important topic, I think. The share of annual federal education loans going to graduate students. So graduate students constitute 16% of all students. It rose from 32% back in 2005 and 6 to 47% in 2020 and 2021. So 47% of the federal education loans are going to graduate students. But what we're starting to see is, my question would be, is this trend, and it was a problematic trend, is it in the rearview mirror? Have we, as a sort of parent-student combination, figured out that we don't need to overpay for college? There are opportunities for students in other areas. And have we just wisened up to say, okay, we don't want to graduate with $100,000 in student loan debt. So how do we avoid that? Because we are borrowing less money than we have in the past. More of that money is going to graduate programs, which frankly, sorry, I'm not repaying your graduate loans. If you successfully graduate, an undergrad degree and you choose to go to a graduate program, I think that's on you. You're older, you're wiser, you know what your career path options are. No, thank you. What's your thoughts on what I've just shared there?
Oh man, I have so many competing thoughts going on in my brain right now. Well, first of all, what I would say is, I haven't done an extensive amount of work to have what I would call a truly expert level opinion on this. But what I would say is like, anecdotally, here's a few of the things that I've observed over the last couple of years. One is higher income families are cash flowing college. They are not taking on loans or not letting their kids take on these loans, which I think I think the student loan system, let me just throw this out there, I think it's predatory the way it's set up. It's the only loan that I know of in existence that you literally cannot discharge in the form of
Correct.
bankruptcy. Like you practically have to die.
It's almost
to get out of these.
impossible to discharge and get.
It creates indentured servants. I don't like that. It's like that's not how finance works in the real world, and I think it totally distorts the incentives for universities and college when it comes to having a great product that they offer and allow pricing to really play a factor. Because if you can just tell somebody, well, if you want to come to Harvard, borrow the money, right? A lot of people will do that because they buy the dream, they buy what's on the brochure. But that aside, what I'm seeing is that a lot of families that are doing well, that people would say are middle class or upper middle class or above, they are not letting their kids take on these loans. They are cash flowing it, or they're figuring out a way to pay for college, using alternative funding mechanisms, either through a combination of state scholarships, grants, using home equity, cash flowing it. They're doing whatever they can to not let their kids graduate with student loans. So that's one piece that I've seen. I don't know how broad that applies across the board, but anecdotally, that's been my experience. The other thing that I would say is, I think it's interesting that so many, or a high percentage of the student loans are coming from graduate degrees, because I would really want to know more about that, because I'm thinking, is this because kids are graduating and not feeling like they are ready to enter the workforce, or they're graduating and realizing they don't have the skills to do what they really want to do, so they need graduate work, and so they're going on? Or is it they're looking at starting salaries and they're saying, you know what, I'm not going to go start work and make $30,000 a year, because that's I can't live on that. So I'm just going to stay in school and keep the party going. I use that as a figure of speech, not that you're partying through graduate school. I would certainly hope not. But I'm just saying, like, are we using graduate school to kind of delay the inevitable, which is life is going to happen, but we're just not ready for it yet?
It's a great question. I don't have an answer to it either.
Yeah.
But I think that becoming a greater and greater component of the student debt burden does raise some eyebrows when we go and talk about student loan forgiveness, because what we're thinking in our mind is we're going to relieve the students that maybe don't have the income, don't have the earning power to forgive their loans. The reality is a lot of those students haven't borrowed that much. And there's the people that go to graduate school to get very intense, very expensive degrees tend to represent a smaller portion of the overall student body, but end up having a more significant share of the pie.
But to me, go ahead.
Well, I think we need to get more focused on the solutions that are already available to us.
Mm-hmm.
One, there were articles and reports going a couple years ago. Michael Lewis did some really good investigative research into how awful some of the loan servicing agencies were at forgiving appropriate student loan debt, where you took as a student a career path into, let's say, teaching, and there were obligations you had to meet as a teacher to have your student loans forgiven. People followed those rules. They submitted their student loan forgiveness paperwork and were denied, almost exclusively denied.
Yeah.
I think there are ways that we need to go and target those people who really did follow the rules, that agreed to take a career path that maybe would have produced less income for them, but they did it under the assumption that a portion of their, or if not all their student loan debt would be forgiven. I mean, we need to get serious about following the rules that exist to help people have their student loan debt forgiven. We do have solutions to help people who are overburdened by higher student loan payments through some of the income repayment programs. So it's based on your income, and there are ways to reduce your student loan payments monthly to make that less burdening. I think we need to be better equipped at finding solutions, targeted solutions to really help people who need help have a lower payment or a lower debt obligation going forward. But just get rid of it, as just saying, hey, it's too much. It's like, wait a second, that we're taking away all the responsibility that we have to each other to make smart financial decisions, to hold the colleges and universities accountable. Maybe the challenge is we can't charge $100,000 a year for a graduate program in sociology. I don't know, but we need to have some conversation about, how do you borrow that much and not be able to repay it? There's problems in the system that need to be addressed versus just blanket, doing away with it.
I'm for treating the disease and not the symptoms, right?
Yeah.
And so to me, it's like the system is broken. I mean, I am all for. Here's what I'm definitely for. I could be open to small loan forgiveness. So people that owe like $10,000 or less, I can be open to that. One, because I just know if there's millions of those loans out there, administrating that is a drag. It's going to be a burden just on whoever's doing it. And I know that there are a lot of people that's kind of where they fall into. But if we're gonna do this, then I need, me as a taxpayer, like I need some things in return. Like I want to see incentives for people that are going into the STEM fields, right? Science, technology, economics, math, the engineering, all these fields that we desperately need people to go into there. Teachers, there is I think Michael Lewis was actually, one of the things he was talking about was people who go into education, their student loans are supposed to be forgiven, and they're horrendous at actually making that happen. We need to fix that. I think
Correct.
all of these colleges and universities, they should be required to show and I don't mean like we have disclosures, like click on our disclosure link on the website. I mean, front and center, when people click on academics and financing, front and center in your face for any career, any degrees that they're promoting, they should show like job placement rates, starting salary positions. So people aren't just willfully led blindly into borrowing and signing up to go on these on these paid 4-year excursions to the college, and the colleges really have no skin in the game after they're done. So I don't know. I need to see something in return. I think the jubilee of just, hey, we're going to forgive student loan debt because it's a crisis and we need to help these people out. I'm not buying that because my wife had a student loan. We paid that thing off. There are millions of other people that have grit through their student loan repayment process and have paid off those loans. And it's the epitome of what I would say is unfair for people that always are talking about fairness. That is unfair to just say, hey, you know what? We're going to forgive these loans. And if you paid yours off, congratulations, good for you. But, sorry, you weren't part of this.
It's also massively inflationary. And
it could be.
Have a little bit of a problem with inflation right now. So we need
I would just go buy consumer stocks.
To cool it off.
I'm buying consumer stocks. That's not a recommendation. Don't come after me, regulators. But I'm just saying, if they do it, I'm buying consumer stocks because I know what these people are about to do. You get another $300, $500, $600 a month in your paycheck. Yeah. Guess what's happening?
Just to wrap it up,
gonna spend some money.
Yeah, just to wrap it up though, there are great resources available. Yeah. College Board is one of them. I think people are doing their homework. I think parents and students alike have gotten sharper and more focused on the economic story of college versus just, the college wants to sell the dream. And, we've kind of sort of view it like it's a home construction product, like you've got to look at it more like a project and evaluate the incentives and what the end result is along with the costs that go into it. So,
right.
I think good job to parents. I think we just keep focusing on it and make the colleges deliver more value.
100%.
All right. What else we got?
All right. Well, I'll round this out today with a little discussion on a retirement topic for our people that are, in or close to retirement, or they're thinking about their retirement years, or are in retirement and, looking at the best ways for them to, plan out how they're going to do income. So I had this article, and we don't do a lot of product specific discussion on here, but I think education is really important. And one of the things that I am seeing more and more of that it troubles me a little bit is that there are a lot of advisors out there, and I use that term extraordinarily, like very broadly, advisors in air quotes, but there are a lot of people out there that want to give really strong opinions about products. And I'm like, yeah, products, they're good products. There's bad products. There's ugly products out there, but it's like, it's how it's used that matters, right? If you never pick up the nail gun because you don't need a nail gun, like then it doesn't matter if the nail gun is a good tool or a handy tool or not. Like you don't need it. You don't have to use it. And so, yes, we're going to talk about the 4-letter word of retirement right now, which is annuities. But there's a great article that I was reading from Dr. Moshe Milevsky. And if you don't know Dr. Milevsky, I mean, he is one of, and I would say he is one of the leading scholars in academia when it comes to, annuities and annuitization. He's written, I think over 15 books, over 60 peer-reviewed papers, and he is adamant that annuities have a role in retirement income planning. But the take that he had in this article, I thought was interesting. He was not so much making the case for the economics and math, which he does that often, but he said this. He goes, he believes that annuities must be a central component of your retirement portfolio. He says stocks and bonds alone will never get you through an entire life cycle. You should include annuities to supplement them. But his rationale for that is that as you get older, you should make fewer and fewer crucial financial decisions. Now, one is I think that's a tremendous argument for having and working with a trusted financial planner, because if you have someone that can help you, you are knowing your plan more and more, you can delegate that over to them to make sure that they keep you on the path. But what he was saying is he goes, in 2 decades, in 2 decades at 70, I'm not so sure, what I should be doing for investment portfolios and constructions. He goes, at 80, I'm even less. And he goes, at 90, I don't want to be making these decisions. And what he's saying is that just a natural byproduct of us as we age. It's our biology. It's got nothing to do with our willingness to learn and stay sharp. We just get worse and worse and worse at making complex financial decisions. It's how we're made. And so he's saying, why continue to do that where your biology is going to work against you? So as you get older, it gets harder and harder to deal with complex financial situations. So can you imagine trying to talk through an advanced asset allocation conversation at age 80? Most 80-year-olds don't want to be doing that, right? So that was his take on it. And I thought it was pretty interesting, especially with one of the things that most of us can observe, even if you're not an expert in retirement, but most of us can observe, is that we are, as a population, generally, we are living longer. I know we have lots of clients that have aging parents, that have parents that have lived into their late 80s, early 90s. We've had a client in our firm that's been over 100 years old. And so, as you get older, it gets harder and harder and harder just naturally to make complicated, complex financial decisions. And so what he's saying is that if you use annuities, and the way he's framing it is, if you use annuities as part of an income plan where they're giving you guaranteed income payments or some type of guaranteed income stream, you're not having to figure out the best way to put your portfolio together to give you an income stream. You've already got that cash flow built into your plan, and that makes life easier.
A couple comments. One, I think for new retirees. So when you first retire and you're planning on that retirement, so maybe you're a few months out.
Yeah.
It's really the first time that you've had time to think about what you've saved, how you've saved it, and what it's going to do for you. Because you're busy working. So a lot of times people don't sit down and go, all right, put everything on the table, really comb through. How does all of this layer together? And I think the first time you go through that process, I think people enjoy complexity because you want to see all of the things at work. It's sort of like taking a watch apart. It's like, I want to see all the components. I want to see everything that I've sort of accomplished over my working career now for the first time, sort of firing on an income for me to live on. And simplicity at that stage, I think, whether it's warranted or not, I think people sort of enjoy the complexity of it all because it's fresh and it's new and you haven't really had a lot of time to think about it. And then, a decade goes by, 2 decades go by, as you get further and further into retirement. I think that desire to have a complex plan really streamlines into having the most simple and easy to follow plan. And so a lot of times what we'll do is you sort of have income that sort of bleeds in over time, that just gets easier and easier to track, and easier and more predictable, method of delivery. And I think the complexity that we favor in our mid 60s is replaced by simplicity in your late 70s and on. And so even though it may be, it's hard to argue what's the right thing to do or what's the wrong thing to do, because making something a little bit more complex doesn't mean it doesn't work. It doesn't work for them. It doesn't work for their long-term plan. But simplicity over time does tend to be the favorite outcome.
Yeah, I would say I would say it a little bit differently. I think what people want to, when they're planning for retirement, I think it's not so much maybe complexity, but it's just they want to go through this very thorough diagnosis of their situation, because that is such a tremendous transition. Like, I'm going from full-time paycheck to full-time retirement, and I want to make sure my lifestyle, what I've worked for, I can maintain that. I don't want to run out of money. And that's consistently like the number one fear. And so people are very vested, in those early retirement planning meetings, because they're trying to figure out, like, hey, like, can I trust this person?
It's a good way to put it.
Do they have the expertise? Do I feel confident that they know and understand my goals? Do I feel confident that I can do this? Does the plan make sense? Am I gonna, is it gonna, so there's a lot there. And I think it's that process that they're looking through, and they want a thorough diagnosis.
Right.
After you go through that, and you've been doing it for, 5 years, 6 years, 10 years, 12 years, as you move through that, man, you're much more at ease because you've been living it, and you're less concerned with like the complexities and the intricacies of it. And I think that's one mistake that a lot of financial people make, is we always want to make it complex. We always want to get the stuff out there and say, no, what, though, let's just have a systems check, see how things are going. But I think his point is to that too, is it kind of lays into where what we naturally see is people becoming more relaxed and settled into their retirement lifestyle. It's also that we're just not going to be as wired to make those critical, complex decisions when we're in our 70s, 80s, even 90s, as we are when we're in our 50s and 60s. And so, correct. 50s and 60s, like, get in there, like, make sure you work that full diagnosis up. But don't think you're going to likely be able to do that same level of high level thinking when you're 75, 80, just because we're biologically not made that way.
And the last point I'll add to that is, and I think some of the thoroughness, as you kind of put it, of becoming very detailed. And we like to become very, very detailed, right? We want to take as many hypotheticals out of the equation as we can. It's not a time for hypotheticals right now. It's like rubber's meeting the road.
Right.
Where does that first income check come from? How long does it last? Where does the next income check come from? And it's a heightened sense of awareness in the beginning part of retirement, because longevity risk is still it's the prime issue, right? How will this continue for my lifetime? Will I have enough money to retire comfortably, to maintain financial independence? And as you grow into retirement and you live longer in retirement, that longevity risk oftentimes can start to dissipate. And so that's not top of mind any longer, because maybe you're now into your mid 80s, late 80s, and you're not just not worried about it.
Right.
As you were when you were, 64 and retiring.
Absolutely. So that's it. That's our show today. Obviously we're going to wait and see what Elon decides to do with the Twitterverse. And if you have kids that you're planning for college, know that there are ways to put together a plan for financing and paying for college that don't include massive student loans. There are a lot of families taking advantage of various different programs and thoughts out there about how to do that. And lastly, if you're looking at retirement planning, just know that the important thing is to make sure you get a thorough diagnosis of your situation and you have a plan, have a written income plan for how you're going to attack those retirement years, because we want retirement to be a season of life something you retire to and things that you look forward to. And having a plan will give you a lot of peace of mind when you do that. So thank you for listening. Thank you for being a part of the show, and we will talk to you next time.